So it was problem 3 something. Now when I ask for adjustments, I said that word many times, adjustment. And when you consolidate, it's always the same sentence. It's your stuff plus my stuff. Is that called adjustments? No. Then you start adjusting. So the retained earnings of the sub as such, is that an adjustment? Yes?
No.
Your stuff plus my stuff. So the retained earnings of the sub at the date we're talking, that's not an adjustment, you take it in. What's an adjustment is the retained earnings of the sub at acquisition date. I didn't take away marks for people who took away the 25 or the 21, I can't remember. Yeah, that's it, the 21,000, that's what is the adjustment. The 25, that goes there. It's 25 minus 21, right? My stuff plus your stuff. Your stuff is 25,000 right now. The retained earnings at December 31st, where we are now, of the sub is 25. Do you take it in? Yes or no? Yes, but what you have to take out is the 21 that was there when you purchased. That's an adjustment. That's what the book calls pre-acquisition adjustments, meaning the retained earnings that were there prior to adjustment. That you have to take away. My stuff plus your stuff, so your retained earnings plus mine, that's a given. I don't give marks for that. Minus 21, that's an adjustment. So you pick up the difference between what they are now and what they were then. Triangle. The difference, remember that? Because retained earnings at a specific date are the retained earnings of the parent plus the sub from acquisition date to now. Well, you understand that? After that, it's all the FVAs, MFVAs, or CMFVAs? CMFVAs. MFVAs are for net income. That's what you have to differentiate. All your numbers, it's all nice, but they have to be at the proper place. So it's plus or minus the CMFVAs. Whether or not you do a schedule, I don't care, because you can do it in your head. The schedule is not the purpose. The schedule is a tool to calculate easily the CMFVAs. But if you do the schedule and then you use the MVAs instead of the CMVAs, it's no good. And then now there's all the IT stuff from chapter 4, from chapter 3. Okay? So you should have had all the pens on that. So for today, we're going to do another problem on chapter 4, 4-9, which have the adjustments, this and that, and the acquisition date. They release that acquisition, that's an adjustment. Yes. Can't remember, what's the number, same name of the company, you can recognize it. I use the same names. It's exactly the same, so just, you'll see it. But I'm picking up the quizzes though. I need your quiz back, as long as you saw where you did your mistake. Everybody saw where they're making mistakes? There's some people who still don't know that the quizzes are exactly the problems that you had to do. So you do have the solution for that. No. It's exactly the same. Okay. So 4-9? all figure out the 11,500? Consideration transferred 160, do we all have that? Any questions on that? Yes, no? Now the time? Yes?
If we net the 5,000,
It's fine.
school.
Of course, this is a working sheet, huh? It's a working sheet, so you can work the way you want. As long it's a calculation to end up with the goodwill. So you can do it 5,000 separate than the 1,005, or do it all in the same basket and say 3,005. It's a calculation. We don't show that to anybody. We will put it in the file as long as people understand that there's a 5,000 that's gross and 1,005 DTL that's attached to it. Either you put them separate or put it all in one. That's your choice. Some people prefer it one way, some others prefer it another way. Even you could, some people do the purchase analysis and they do the fair values one by one gross, and the DTLs, DTAs, all netted in one account. Because basically DTAs and DTLs will be 30% of the sum of the FVAs. The shorter you can do it, the better. It's a calculation. So you can go quicker by netting it once or in total. Whoever, as long as you get to the proper goodwill. The purpose of this is to get to goodwill. And then you have your schedule that also is not mandatory. Schedule is not mandatory in an exam necessarily, especially if there's one or two, you can actually carry it in your brain. But in real life, is a schedule mandatory? No, in real life. Will you put your brain in a file? Can somebody that next year go and pick at your brain? No, so you have to put it on file. Even if it's one adjustment, you have to write it down so the person next year can pick it up and follow it through. In an exam, you can get away with it because all we want is for you to do the financial statements and nobody will look at your file next year. You understand? Of course, the schedule is practical, especially if you have many to carry in your brain. After a while, your brain gets a little confused. The purpose of the schedule is really to differentiate the MFVAs, the CMFVAs, and the UFVAs. Because they are all used for different places. there's no system of those, you know, we don't know what they're doing. We don't know if she's covered everything. So is the schedule done? Yes, no? Finished? See, that's a case where it's not really needed because there's basically only a few things to take care of, which is basically the machine and its DTL. The goodwill has not been impaired. So see, that's a situation where schedule is not really needed. You could actually jump right to the financial statements. $5,000 over 10 years, so it's going to be a $500 amortization, plus or minus, because it's not really the number. 500, I know everybody can do that. 5,000 divided by 10, I know you can do that. Is the 500, is it a plus or a minus? Well, it depends on what. On the amortization expense itself, it's going to be a plus. On the impact on net income, it's going to be a minus. Pluses and minuses, it's all about pluses and minuses, but you have to know what you're doing it on. And this schedule, instead of all arrows up and down, and you never know if you've done everything, this is, you know you've taken care of everything, you know you've started with 15. What is the 15? That's from your calculation. It's the 11,500 of the goodwill, 5,000 on the machine, and it's DTL that goes with it. Yes?
I'm trying to understand better how does DTL affect income positively, why it's positive on the lines below. DTL,
Why it's positive on what?
on net income, retained earnings, whatnot.
Because here, this is a plus. The FVA is a plus itself. So it means that it will reduce net income, it will reduce,
So that creates a deferred tax.
because it increases amortization. Increase, expense, decrease, net income and retained earnings. You understand?
So how does that affect,
Why does that affect what?
how does that make an increase in net income percent? How does that affect net income positively?
Not positively. Here, minus
No, that's depreciation, I
deferred
understand.
tax liability.
the tax, the DTL.
Yeah,
Because
DTL.
the DTL, when you created it, you created a DTL. As you've learned in ACCO 320, deferred taxes are created, then absorbed. Huh? It's create, and then it goes down to zero. Huh? If you create a DTA, you create a DTA, and then at some point in time, it's going to be zero. You create a DTL, some point in time, it's going to be zero. Our target is zero. So when you eliminate, say, a DTA, what's your journal entry to absorb a DTA, to reverse a DTA? Debit expense, credit DTA. What's your journal entry to resorb, to reverse a DTL? Debit the DTL, credit the income tax expense. ACCO 320, remember that? And ACCO 320, you learn to create DTAs or DTLs, and then reverse, because that's the system of deferred taxes. You create, then reverse. Create, reverse. When you create it, either a DTA or a DTL, it affects the income tax expense, and when it reverses, it affects the net income the other way. Just basic journal entry. When you create it, say you create a DTA, DTA debit, income tax expense credit. When it's reversed, it's income tax to DTA. So at the end of a certain period, what will be the end of the story? Zero. That's the principle of deferred taxes. Create, reverse. When When you create the DTA, you reduce income tax expense, and in the future years, it reverses. ACCO 320.